Stocks take a dip after Friday's surge, while the U.S. dollar soars. The Federal Reserve's New York headquarters stands tall in Manhattan, a symbol of economic power. Yet, amidst the concrete jungle, a shift in monetary policy is brewing. Wall Street witnessed a decline in stock prices on Monday, a stark contrast to the gains of the previous Friday. Traders are now pricing in an 84% chance of a Fed rate cut in September, a move that has strengthened the dollar. Last week, the dollar experienced a fall following Fed Chair Jerome Powell's remarks at the Jackson Hole Symposium in Wyoming. However, the dollar has since rebounded, and U.S. Treasury yields are on the rise. Major brokerages, including Barclays, BNP Paribas, and Deutsche Bank, now anticipate a 25 basis point Fed rate cut in September. This expectation is further reinforced by the CME Group's FedWatch tool, which indicates a high likelihood of a cut. Peter Cardillo, chief market economist at Spartan Capital Securities, commented, "There was a lot of enthusiasm on Friday about Powell's indication of a likely rate cut. The market might have overreacted to his comments." Cardillo further added, "I believe we will see a rate cut, but I don't think it will exceed 25 basis points. Much depends on this Friday's PCE Price Inflation Index. Data for August, due before the Fed's September meeting, could sway Fed policy. The Personal Consumption Prices reading, a key inflation gauge for the Fed, is eagerly awaited. Hotter than expected U.S. producer price data from last month has raised questions about the certainty of a rate cut. Investors are also eagerly anticipating results from AI chipmaker Nvidia, which is expected to report on Wednesday. The Dow Jones Industrial Average fell 0.77%, the S&P 500 declined 0.43%, and the Nasdaq Composite dropped 0.22%. Nvidia's results are among the last to be reported for the S&P 500 companies, and so far, the overall earnings have exceeded expectations, providing support to the stock market. As of Friday, the estimated year-over-year earnings growth for the S&P 500 stood at 12.9%. A significant increase from 5.8% on July 1st, according to LSEG. In global markets, MSCI's gauge of stocks fell 0.24%, while the Pan-European Stock 600 index declined by 0.44%. In deal news, U.S. soft drinks giant Keurig Dr Pepper is set to acquire JDE Peet's, creating a global coffee powerhouse to rival market leader Nestlé. This $18 billion takeover is Europe's largest acquisition in over 2 years. London markets were closed for a holiday, resulting in thinner trading volumes across Europe. On the trade front, U.S. President Donald Trump expressed his desire to meet with North Korean leader Kim Jong-un this year and indicated openness to further trade talks with South Korea. However, he also criticized the visiting Asian ally. The Korean won weakened by 0.5% against the dollar. The dollar index, measuring the greenback against a basket of currencies, rose by 0.56% to 98.39. The euro fell by 0.79% to $1.1623, while the dollar strengthened against the Japanese yen by 0.5% to 147.67. U.S. Treasury yields also increased as traders prepared for auctions this week. The Treasury will be selling short and intermediate-dated debt. The yield on benchmark U.S. 10-year notes rose to 4.277%. Earlier, Eurozone bond yields also increased, reversing their fall from late Friday. Oil prices continued their upward trajectory from last week as traders anticipated more U.S. sanctions on Russian oil and potential attacks on Russian energy infrastructure by Ukraine, which could disrupt supplies. U.S. crude futures gained, settling at $64.80 a barrel, while Brent futures rose to $68.80. Spot gold prices, on the other hand, fell by 0.21% to $3,364.47 an ounce. This report was compiled by Carolyn Valakevich in New York, with additional contributions from Nell Mackenzie in London. It has been edited by Andrew Heavens, Lisa Shoemaker, and Nia Williams, adhering to the Thomson Reuters Trust Principles.